how tax lien foreclosures work, and how you can profit from them. Since 1972, I've been involved in real estate. Single-family homes, condominiums, office buildings, apartment properties. But I've found a great way to make more money with a lot less risk. What did that turn out to be? Foreclosures and tax liens and tax defaulted properties. You're also going to find out how to take advantage of these markets and make some big profits for you and to be able to take care of your family. So here's how you're going to profit from that.
Welcome back to the Wealth Without Risk destination, where we turn novice investors into savvy professionals.
Now, you're going to be amazed at what you're going to see over the next few minutes and here, but I'm going to first start out with some foundational information, just give you the baseline of this tax lien foreclosures and regular mortgage foreclosure. I'm going to make sure that you understand the difference between those two, and let's do it in a very down-to-earth manner, okay? So most people don't understand that there's a difference between a mortgage foreclosure and a tax lien certificate foreclosure. Much different markets, okay? So the banks have a business of lending to homeowners and to farms and ranchers and whatever. They want to lend money on real estate property. So when they lend that money, that property actually is the collateral for the loan. So they might be loaning $100,000, $200,000. They could be loaning big dollars. Now, if the people don't pay the mortgage, well, what are they going to do? They're going to have to recover that collateral. Now, that's called the mortgage foreclosure. Well, what if they're owed 95% loan? What if they lent 95 or 97% and they foreclose? Well, you don't want to be at that foreclosure auction. You're not going to pay 95 or 97% and make a profit. So the mortgage foreclosure market is a little on the tough side right now. Now, there was a time that was a great business, but it's going to take an awful lot to make work. So here's a better way to make money. In the real estate business, they've always had people that didn't pay their loans. Well, at the local county level, the county said, wait a minute, if you might not pay your loan, but you've got to pay your taxes on this property. So they don't tolerate anybody not paying taxes. So for over 200 years, everything I tell you right now is 200 years old. Local counties got together with the legislature and they created a process where they have to collect the taxes. The taxes they collect are called property taxes. They're usually about 1%. All the treasury really cares about is collecting back taxes and keeping property on the tax roll. And if they don't get paid, they take the property. But they're not in the business of real estate, so they're going to put that real estate back into the market at a very low price. And that low price is going to be very close to back taxes, maybe 10 cents or 20 cents or 30 cents on the dollar. Now compare that with a mortgage foreclosure, where they're foreclosing on that giant loan, and that giant loan might be 97% of the value, but a loan could be $100,000 or $200,000. So where do you want to be? Do you want to be paying 97% for a property, or do you want to get it for 5 or 10%? Well, you'll have to be a mathematician to figure that one out. And so when you buy a tax defaulted property, you're going to buy from the treasurer in the county that you're at. Now, that's a powerful way to be able to do business because number one, it's local. Number two, you can do it online. Number three, you're doing business directly with the government. The beauty of this whole business is you don't invest with Ted Thomas. You're going to invest directly with the government, and you're going to get a check back from the government. All right, so remember that treasurer has a lot of power, and when they confiscate a property, they wipe the mortgage off the property. They don't tear the mortgage up. They just wipe it off the property records, and guess what? The person that has the mortgage, they still owe the money. They still owe it, and they still owe it to the bank. And so now the bank's got a real problem. So how do these tax certificates work? And how do these foreclosures work? Number one, anybody can attend a tax auction. Number two, anybody can bid. Number three, the starting bid is going to be 10, 20, 30 cents on the dollar. All right, now how do you end up with properties in this market? You end up with properties because number one, the local governments, half of them will sell tax lien certificates. When they sell those tax lien certificates, they're going to sell them to collect money for taxes.
If you're enjoying this video and want to join our journey to financial freedom, don't forget to like, leave a comment with your thoughts or questions, and subscribe to stay updated on all things wealth building. Now back to our video.
All right, if you buy a tax lien certificate, you don't get possession of that property. What you do get is you get a certificate. So those counties are very benevolent. You're not going to get possession of the property, but you're going to be able to make 16, 18, 24%. Now, that's a nice way to make money. Think about that. The tax lien and tax deed business is far superior to the mortgage business. You'll find out they're predictable, certain, and secure, I'm probably the only real estate person that says that because I know what real estate is about. Everybody wants to talk about the hype. And the hype is buy it low and then get rich. Well, I don't believe in that hype because I'm a long-term investor. I'm a value investor. So what I do is if I can get an 80% discount, then what I do, so that means I bought it for 20%. So what I'm going to do is I'm just going to mark it up to where I own it at 40%. I'm going to sell it at 40%. I make a nice little profit and move on to the next one. There are so many properties. There's so much abundance that I can do this, and I've been doing it for 25 years. I have a client that started with me in Phoenix, Arizona, and that client spent $11,000 on a tax lien certificate. So they put $11,000 in, and what they intended to do, they thought they'd get paid. They didn't get possession, so they were waiting to get paid. Well, at the end of 2 years, they didn't get paid. So they went to the county and said, look, we haven't got paid. And they had, prior to buying it, they had gone out and looked at a property. It was a nice property. They liked what they saw. And so the county went through a legal process and they were awarded the property. So they didn't want another property. They already had one. So they had spent $11,000 and they were supposed to get 16% interest on their tax certificate. Well, they didn't get paid. So they were awarded the property. So what they do with the property, they sold it. Now, they sold it by having Zillow sell the property. So they didn't do a lot of work. All they did is buy a certificate. So their investment was $11,000. And when they sold, after commissions, they got paid $169,000. That means for every dollar they invested, they got $17 back. I mean, this is a powerful investment environment. I mean, how many deals like that would you have to do in your life? All right, 97% of all the tax lien certificates are going to pay you whatever you invested plus 16, 18, or 24%. All right, that's what you're going to get paid. All right, in this case, they didn't get paid, so they got the property. That's happening across America every day. You need to get in on it. I started in real estate in the 70s. In the 80s, I had a big business. And in 1989, I wrote a book, and this is the book I'm just holding up. And the big book, the title of it is Foreclosure Profits. Now, this is a big, thick book. You couldn't get that in the bookstore, but I wrote one that's a little smaller than this for the bookstore. It stayed there for 12 years. And then, of course, times changed, so the whatever. And I went from the foreclosure business to the tax lien and deed business. So I've written more than one book on it. So this book turned out to be a bestseller. There's another book I wrote about foreclosure. It's called Foreclosure Gold Mining. And this one here is called an illustrated guide. So I have a lot of experience at foreclosure, but I made a transition. So now I discovered the tax lien and deed business, which has been around for 200 years. And now I looked at that and said, wait a minute, I can get an 80% discount. I'm not going to pay 80%. I'm going to get an 80% discount. I'll buy all day long at 80%. I could show you tons of properties I bought at 20 cents on the dollar, 30 cents on the dollar. I'll do that all day long. I can make money every single weekend if I want, and so can you.
Unlock your exclusive free gift now by clicking the link below. Instant access awaits.